Hello, Uranium friends. We are back with episode 3 of Uranium Talk, talking all things uranium. I am Jungle Funk from the Chart Guys, joined here by Chris, Red Devil. Chris, how you doing?
Joseph, how are you, sir?
I'm doing good, man. I am doing good. It was an exciting week across the markets. We finally got our daily consolidation in the broad market after the strong CPI reaction, and bulls are buying up the dip, trying to set that daily higher low in a healthy manner. So we'll just look to see. Can't lose context that we are looking for a monthly lower high in the broad market, but for the time being, the show goes on. So the low of yesterday is going to end up being a key support there. But enough about that. Let's talk about some uranium. What went on this week? What's the
Yeah,
latest?
man. Little signs of weakness this week on uranium too, but we've had a couple of interesting developments fundamentally that I think we should talk about, right? So the first one is the deal that Energy Fuels did with Encore Energy, UUUU. They sold one of their processing to one of their mines, an ISR mine over in the Alta Mesa, Texas mine to Encore, which is pretty interesting because you talk about management with a company. You made a pretty good deal here, right? So they bought this thing, I think, in 2016 for like 32 million, and they just sold it to Encore for 120 million. So they forexed that investment. So pretty good. So
That is pretty good.
I mean, what does Encore get out of this, right? So, Encore seems to be a bit of a favorite amongst the uranium investing community, as far as what I've seen. So, I mean, what does Encore get? Well, they get a fully licensed mine in standby, right? So they might have to do possibly raise some funds to get this thing going, but it makes them truly a near-term producer, which is something we like to look for early in the cycle, right? And you'll see that Joe is kind of pulling up the chart there. What do you got on the chart there, Joe?
Well, when we're looking at Encore, well, we'll start a bit zoomed out. I'm on the daily right now. Let's go out to the monthly. And we can see that in a relative sense, so it was part of our monthly downtrend crew, but here we are seeing lower lows. We're breaking this base of support. And when we compare that to some of our other members from the monthly downtrend crew, we've got like UUUU is threatening to reconfirm the monthly uptrend. NXE is also testing monthly lower highs. So the weakness here in a relative sense across the sector is notable on Encore. And when we do zoom in, we can see when that deal went through, it was not perceived well in terms of the price of the chart. But that's not wildly uncommon on these types of acquisitions because of like what you said of it could mean that they've got to do a raise or something like that. So the hope here is that short-term pain, long-term gain type dealio. And as
Yeah,
far as the
yeah,
short-term pain, we're seeing that.
most people are looking at it that way, but it signals something, right? Because we're talking about we still have this geopolitical overhang with us with Russia and our lack of uranium processing and no enrichment capacity. And it seems as though a lot of these United States, North American, Canadian companies are starting to try to position for the what they think is the inevitable, which is maybe some we have to get capacity on this side of the world, right? So
No.
Encore, maybe they know that U.S. government contracts are coming. Maybe they already have it, they know about it, and they need to position for that. It's possible, right? We don't know that because there's never been any announcements. Okay,
Yeah, you
so
certainly don't make $120 million purchase without some plans down the pipeline or something like that.
well,
So,
yeah, but it makes sense, right? So
yeah,
why would you arbitrarily just burn that kind of cash unless you knew that it was going to be accretive in some way? A
yeah,
decent.
they've got a reason to think that the demand for the product that they're
Yeah, I mean, a
mining is
decent
going to
management
increase.
company, which supposedly um, Encore has, right? This is Bill Sheriff, and if you go back, I believe he was Paladin CEO back in the day when in the last bull run. but you should, if you want to know a little bit more about this particular company and the management, take a look at it. It's kind of a darling of the space. Technically, right now, it's not, right. The charts are telling you there's some weakness, but I'm considering this a buying opportunity. I just don't know where my buying opportunity is going to be. I would rather see a little bit more, at least some basing action before I, enter another tranche. I do have a position here, and it is slightly underwater. It's not horrible. It's not great, but it is underwater. There's no two ways about it. So, they had also done a reverse split, I don't know, a month ago or 2 weeks ago. What's the date on that reverse split? You see it on that chart there, Joe? What is that?
Yeah, Wednesday, September 14th.
Okay, so September
a couple
14th, they
months
did a
ago.
reverse split, and they're it was because they were saying that they wanted to get a Nasdaq listing. Okay, most of these companies that do these reverse splits, they all say the same thing. Could they get a Nasdaq listing? Yeah, it's possible, right? But it's difficult. It's not so easy. You can't just get a Nasdaq listing. So you have to jump through
Yeah,
a lot of hoops
that
to
was
get.
one step of them to try to
Yeah,
get within
it's
the
one step.
parameters. So, as
So
far as
there's it probably puts them around 3 million pounds a year in production capacity with when this Alta Mesa mine actually gets operating. But the other thing is that, again, more speculation, but there is a small company out there called Western Uranium and Vanadium, WSTRF maybe, or WUC on the CSE. Just check that Western Uranium. Just check the F ticker too.
yeah, let me see here.
While
Western.
you're doing that, so Western has always had a little bit of an issue with Energy Fuels, with UUUU. And it's been, talked about and documented a little bit before. So Mark Chalmers just for some reason, he didn't want to do any real business with Western. So the little secret possibility, and it's pure speculation on my part, that Western might have a little bit of it might be a positive for Western, but Western is a tough one, right? It's a really low float, and it's very small. It's a very small holding in both of the ETFs. So, it's not something that you should be going out and buying, but it's just something you might want to look at as an offshoot of this particular deal.
To take a quick peek at the chart, so that OTC ticker is WSTRF, and we actually have a nice bit of clarity here as things just kind of tighten up. So as much as that might be a speculative purchase, a lot of times in trading, it's not about necessarily like being right. It's about your risk and your reward. And when you have a clear setup like this with clear levels to be going off of, your price to find out if you're right is much cheaper than if we pop back over to ENCUF. Like, we're in an area with a lack of support. There's not really much to play off of. So even though there is this exciting development with them getting more capacity under their belt, it's a bit of a tougher play. And with something like ENCUF, you kind of want to wait for the tides to turn, like you were saying, Chris, at least some basing action, because as a trader, that allows you to set up a trade in a more reasonable sense. But with WSTRF, you've got these clear levels to be going off of. It's certainly a low float little ripper, but you can be playing off a
Yeah,
buck if
it
you're
can be
more.
actually.
Yeah, I mean these penny stocks on the OTC, what can just look like a chill day is many percent, but as we get really tight in this range here, even for this low float guy, it's just a 5% from low to high.
Yeah, the stuff like Western, they're pretty cool to play up when the sector is really moving. You can get some action out of it, but keep an eye on that. We'll see how it develops. We'll update you if anything does, obviously. So, but let's move on, because there's some other news that we need to just UEC. All right, so they announced this week two things, and in my opinion, they're connected. So they just increased their license capacity for their Texas operations by 4x. So
Wow.
they actually got the licenses to, it's interesting, right? So we're seeing this whole thing play out, right? We're seeing that the United States needs to get some hometown operations, and then you're seeing this consolidation and M&A in the space. Now you're seeing UEC kind of, increase their license capacity. So really good sign. The other thing they did is they filed an ATM, a shelf filing. So, and it makes sense, right? So they're probably going to need some money to build out this capacity in whatever form that it is. But they've just done a $300 million at the market shelf filing. So for those of you who don't know what ATMs are, it's very simple. They can sell shares up to $300 million at any time they want at the market. So sometimes these things do put selling pressure on a stock when it gets a good run, because the company is going to want to take advantage of the higher prices. So that's the news on UEC this week.
Okay, so that will just always be looming then, that we know that they could drop the 300 million share bomb or $300 million bomb.
They have $300 million.
Okay, okay.
And it doesn't necessarily mean, of course, that they do it all in one shot, right?
Yeah,
So
yeah, they can kind of just tap into that as
yeah,
needed. So, yeah, to take a quick peek here at the UEC chart, there is certainly nothing notably bearish with that filing this week. It is kind of in step with the rest of the sector. And like a lot of stuff, we're just continuing to tighten up. I know we've been watching this 2-day chart. We've just got this 2-day tightening range. So we've got our 2-day lower high set up here. And now the question will be, can bulls hold 361 to stay in this range? Or do we kind of just end up in a broader tightening range where we're then looking down to 348 and 318? So on the monthly here, again, as we talked about last week, I believe it was, we're just sideways. So really not a lot going on. So that's just that.
okay. So let's spot price, and why don't you the ability to do a screen share?
Yeah, let's get you on here.
All right. So just before I even share my screen, here's the deal with spot price right now. It's doing nothing, right? It's sideways. It's hovering around $50. It doesn't seem like there's many transactions going on that we know of, that we can publicly know about. But it's basically just doing that. So, but the other thing that happened this week, oh God, Joe, my technical abilities have been messed up.
We'll send the Geek Squad over on an
Yeah, send the
emergency
Geek
call.
Squad. So, am I able to share?
Yeah, I'm ready for you.
Okay,
Just
so I'm
need
going
you
to hit
to.
share.
All right, we have gotcha. You're live.
Okay, so this is U.UN, SPUT, the Sprott Physical Uranium Trust, whatever you want to call it. So spot price hasn't, it's just sideways, right? But to me, what I'm looking at the moment is this weekly, trend support line, whatever you want to call it, has been breached, and it's been breached with a little bit of authority. Now, when I just come in a little bit closer, yeah, see this white line right here? That is the 200-day moving average. So it took that out also. So it's been using it as, it was resistance here, obviously, and now it's been using it as support, a little undercut there, and it's bounced a couple times, and now it's broken down again on it. So we've seen this act before, right here, right?
Yeah.
And we're seeing it again now. So I still want to add to my position here. I've said it multiple times over the past 2 years. I believe that this is the safest spot in the space to be. I do not believe that it will give you the leverage that the miners will, but it's more conservative in my opinion, and it's safer. So there's a couple of implications that came out of this dive in the past couple of days or the week or whatever. A, we haven't really seen the money rotate into the miners, right? So if you look at URNM, you look at CCJ, You look at all these other, the minors, it didn't rotate in. So that to me is a little bit of a sign of weakness, but I still want to add to here. So if you want to be super, or if I want to be super aggressive, which I'm not going to be because I have a position, I'm looking right here as my stop area, right? So it's gotten some, it's kind of made a little bit of move. It's a little bit of an inside bar today, and I try not to really make entries on inside bars. So, but if you want to be aggressive on it, this is a good spot, and you use this. What's this? You use that 1488 as your stop out level, right? And that's a pretty low risk play, and you're probably going to be looking at a weekly lower high as the result, as opposed to 1793. But I'm sure ChartGeek is going to expand upon that a little bit more. But really, the area that I'm looking at is over here at 1436. So, and there's another thing that happened, by the way, with this drawdown. It filled this gap, right? So we had a little bit of a trading gap here, 1502,
Yeah, kind of a
6 cents.
double
But
gap there, actually.
yeah, well, it's an island gap. So yeah, it's a little mini island, but yeah, this is all filled. We do have a little gap down here, but I'm not really overly even thinking about that gap right now. Okay, so this is filled, and I'm looking at this level as my area where I'll probably want to say that I'm wrong. We do have close to daily oversold conditions. If you really look at the history of this thing for a while, it doesn't get there very often, and when it does, it gets out of there pretty quick. So to me, it's a good spot. Maybe I might change my mind a little bit. I'm going to go over this stuff on the weekend. I might take a half of my ad here, and then maybe if it draws down into this 1436 area, maybe take another half. But we'll see as time goes on. But that's what I'm looking at right now with that, and that's good. I mean, I think this is a little bit of significant change in the behavior of this, but we've seen it before. We've had a little
Yeah,
bit of a little bit of buying there, but this is powerful drawdown. There's power behind this. Look at the volume. So
yeah.
there's some momentum here. It's a high volume drawdown. Maybe there's something that we don't know yet. Possibility. It did make a little bit of a recovery, but it's not a lot, and it's a low volume recovery. So,
Yeah,
eh.
the nice thing is with the range tightening up there.
I'm going to give you your screen back, Joe.
Okay.
All right.
Um, thank you, sir. With the range tightening up there, you kind of have some options with that, and if you want to be aggressive and just go ahead and try to make a play on this, you can. If these inside bars break to the upside, you can make your entry and put your stop below the low and say that, like, okay, this is either going to be a local bottom for a weekly bounce or it's not, and I'll stop out and I'm wrong and I'll try again. There's no need to try to catch these knives in a situation like this. But to kind of talk about how we got here and how you use multiple time frames and retracement sizes to try to postulate the most likely scenario. And I'll actually turn these lines back off. And with what we were talking about in the first episode of how, because of the depth of this pullback down, that we would anticipate we'd get a monthly lower high up here. And while when you zoom in on this move, it's definitely looks intense, but then we zoom out and we can kind of get our grips and get our perspective and realize that, like, okay, well, what we were watching there of the monthly lower high being the most likely scenario is now playing out. And just as this big move down created enough room for a lower high there, this strong bounce up is now created enough room for a monthly higher low here. So really, in my eyes, the question is going to be, are bulls going to put a foot in the ground here soon and keep the monthly trend change in the cards? And how we will determine if that is the most likely scenario or not is through our fib retracements. So we actually have some decent confluence here that we're right around this 0.5 retrace. And if you want continuation to remain favorable, you want to put a foot in the ground above that 0.5 retrace. So That's 1481. That's a level that I'm going to be keeping an eye on. And then, as you mentioned, daily oversold. Let's turn on our little RSI projector indicator. So right now, daily oversold was around that 0.5 retrace, and it's kind of getting front run at the moment. But in a healthy monthly perspective, you want daily oversold marking your monthly high or low. So the fact that bulls have put a foot in the ground here is notable, and I would think that if we do see much more downside, then that is a bit more of an issue structurally. But if bulls can recover from here, get a nice daily bounce, get a daily trend change, get a nice weekly bounce, then we'll begin to be starting to shape up this monthly high or low. And if that can happen here, then the broader context is still fine. But if we do pull back more, straighten this out. If we do pull back more, then we'll be looking at the potential of a monthly tightening range, which isn't the worst thing. I mean, if you're not giving back all of these gains off of the 2020 lows, that's kind of fine just to be hanging out at the highs here.
So yeah, check this out. Technical analysis, right? Basic technical analysis. Daily oversold with a name that's in a monthly uptrend, hitting a 50% retracement. Good buy spot. Low risk stop out areas that we can see. So it's a decent area for me, and we got a gap fill. So I'm looking at this thing, and I'm probably looking to add a little bit to my position on this drawdown.
Yeah, it's the nice thing about trading and having an active risk management system is it really doesn't matter what happens. You manage your risk, you set up, you look for good risk to reward, and if you're wrong, you pay a little price. You take a little paper cut, and then you move on to the next trade to try to set it up. We're getting long on time here, so I will be brief. But just to touch on one more thing on the note of technical analysis, and again using these multiple time frames, we knew we're looking for a monthly lower high, and then we started to see this rising wedge here. And the key characteristic of a rising wedge is you start to get these higher highs without follow through. And in the chat room, we started to sniff it out right here when we broke this key resistance and then entered daily consolidation. And we were like, okay, we got to keep an eye out for this rising wedge. And then we got more higher highs without follow through, and then one more round of higher highs without follow through. And you can kind of use that clue in conjunction with the fact that we are looking for a monthly lower high. And it played out picture perfect here. And it's just, I know people aren't out here shorting the Sprott fund, but if you've got a position and you're looking for the lower high on the monthly, and then you start to see this wedge, then that's when you can kind of trim off some of your position, lighten up a little bit. I know most people are going to want to maintain some degree of exposure because there's a lot of position traders and sector traders in here. But when you get this type of setup within the broader monthly context, then that's an opportunity where you can trim a quarter of your position, trim a half of your position. And then now, if you trimmed out, even if you waited for the bear break, if you trimmed out at 17, then here you are with the opportunity to buy $2 lower. And that's how you can kind of just improve your cost basis over time with just marginal technical understanding. You don't need to be a technical wizard to get these trends down. So you love to see it play out clean. Bear break, back test, and then to the downside. So we'll look to see what can bulls string together as far as a bounce is concerned.
So Joe,
Chris,
fundamentals tell you where to be. Technicals tell you when to be.
Yes, sir. And this is a good example of that combo here.
Over and out.
Over and out. Hope everyone has a wonderful trading week, and we will see you next time.
See ya.
Peace.